Hello, everybody. I hope you guys are having a fantastic evening. In today's video, I'm going to talk about a stock that I absolutely love. I adore this stock. This stock is literally mooning up. It's one of the few positions that's actually not only even, but tremendously up over the last year. As a matter of fact, it's up over 95%, nearly 100% over the last 12 months. It's up 50% year to date alone. This stock has 95%, you heard that correct, a 9 and a 5% growth year over year. And the growth just keeps expanding. It's not like just 1 year. It keeps expanding, right? 70%, 80%, 90%. It's absolutely freaking insane. And they keep beating their expectations, not meeting, beating and upgrading their expectations every single earning. This company has a very, very, very sticky product and a very, very sticky revolving revenue stream. They sell products and they have a 90+ retention of repeat business. Once somebody uses their product, they just keep ordering. Now, the stock that I'm going to talk about is no thrills, no frills. It's not a tech company, but it's an absolutely monumentally fantastic company in my personal opinion. Of course, do your own research. This is just my opinion. I've been talking about it on my channel, but nobody really listens. And I've been talking to it to my Patreon members. When I had Patreon, I don't anymore. And a couple of people bought into it and they're like, hey, Adam, thank you so much. We're doing really good with the stock. The stock that I want to talk about today is called Hims. The product is Hims and Hers. And Hims essentially deals with problems for males and females that you wouldn't normally go to see a doctor for. In males, they deal with hair loss, they deal with skin problems, they deal with erectile dysfunction, and a lot of things that a lot of males, for some reason, don't want to come and speak about. They don't want to go see a doctor about this. It's kind of taboo. Some people might make fun of them because we're all freaking children in this world. And because of that, they have a winning formula. So they do telehealth. Teledoc is whack. This is the real telehealth. And they essentially give the telehealth away for free. And they do it so that they could sell their products. And the way it works is when they sell a product, the products piggyback between each other. So I do it for hair loss, for example. So I have a shampoo, a conditioner, a serum, I do biotin pills, and there's a bunch of other products. And the same thing happens when you do skincare. The same thing happens if you do erectile dysfunction and whatever you use them for. And they have an entire line for women as well. Recently, they were actually upgraded by Jefferies from a $7 price target to an $11 price target. They're about to have earnings at the end of February. I'm going to go over a few numbers in just a moment, so don't worry about that. They're about to have earnings at the end of February, and it is believed that they're going to be profitable in this quarter, so towards the end of the quarter, which means they're going to reach GAAP profitability in Q1 of 2023, an actual profitable quarter. It's freaking remarkable because they're getting there like a year earlier. You heard that right. They were supposed to do this like at the end of next year. They're doing it at the end of last year. It's pretty freaking remarkable. The product essentially sells itself. They're only in 2 markets, mainly the United States and also in the UK. Think about what I just said. Mainly in the US, but also in the UK. They have the ability to grow in the entire freaking world. Why? Healthcare is expensive. If they could do telehealth that they charge less than it costs you to go to your actual doctor, and they sell their products at near cost, so it's all about quantity, right? Quantity. Because they sell everything at near cost, they make a healthy profit, right? Nothing crazy, a healthy profit. But where it is they sell a shitload of their products. And because they do that, they keep attracting more and more clients. Hence why they have over a 90% reoccurring revenue stream by selling their products. Now, again, this is not any of these fun, really cool companies like a Tesla, like a Palantir, a Microsoft, and a Google, but they are solving real world problems. They have an absolute utility, and the utility is, I don't want to talk about my problems, right? Hair loss, my dick don't work, I got a pimple on my butt. whatever. People don't want to talk about shit like that because people are children and people make fun of them because those people are also children. And this is why I believe Hims is going to grow in the next year, in the next decade, so on and so forth, because they're going to keep expanding their product line. Now, they did just announce some massive deals and partnerships that's going to keep expanding their lines, expanding their reach, and expanding their margins and profitability. I, for one, am looking forward to this company growing in the future, and a lot of people don't want to invest in a company unless they're GAAP profitable, unless they're a profitable company. I like to invest in companies that are not profitable, but on their way to becoming profitable. What more can you ask for than a company that's going to be profitable approximately 1 year before anybody expected them, including themselves, to be profitable? On top of that, you're still able to buy them before they became profitable. So it's kind of like the best of both worlds. The stock had a crazy run up, but believe it or not, there's still only a $2 billion market cap. And I'll tell you something else. Cathie Wood loves Teladoc. She will eventually sell Teladoc and buy into Hims. It only makes sense. Now, Cathie Wood might be the killer of all stocks, but at the end of the day, she will dump a shit ton of money into Hims. I don't want to speculate, but I have a feeling she will do that in the future. It just makes sense because Hims is better than Teladoc in every single way when it comes to telehealth, because it does not just rely on telehealth. Let's go over to my desk really fast. I want to show you some presentations. I want to show you some partnerships and show you this upgrade. Before I go any further, I do have a link to my Discord down below. It's in the description. It's completely 100% free. Please join the Adam Bergman community. We're like 160 strong. We don't just talk about stocks. We also talk about cryptocurrencies. We also talk about real estate. We also talk about side hustles. And we also talk about the economy. And if you want me to talk about stocks other than Palantir, although I love Palantir, I do like to talk about other things, just nobody ever watches them. I love Hims stock. I truly love this company. It's so under the radar and nobody's talking about them. Let's go to my desk and I want to show you guys some data, some presentations, and you guys make up your own mind. Now, fair warning before I go over the data, 2 YouTubers reviewed this. I was on Tom Nash's show, and he reviewed it through Stock MVP, and he actually admitted the numbers look pretty good. He needed to do more research, but he literally did this live and he's like, wow, this company looks pretty good. I had a request for him to review that, number 1. Number 2, Strongman Finance. Believe it or not, Strongman Finance. Somebody asked him to review Hims. He reviewed it. I didn't watch the entire video, but let's just say he doesn't like anything that makes money, right? He just likes boring index funds. Shout out to him. No hate whatsoever. So for him to even say, hey, this company might not be so bad, means this company is freaking really good. He honestly did analyze it and he's like, it's not as bad as it could be. It doesn't look so bad. And again, for him, that means this company is actually super strong. Let's go into the presentation. I want to show you some numbers. So this is their recent third quarter 2022 financials. Just look at these numbers. Revenue growth, 145 million. That's a 95% increase. 95% increase over the prior year. 90+% reoccurring subscription revenue. That means that when you have a subscription, when you use their products, you will order it again and again and again. And that's true. Everything that I have is on automatic repeat, renew, so on and so forth. And sometimes they even run out of their products and then I have to buy it on the secondary market like on Amazon, which tells you something. Not to mention they are actually on shelves in some pharmacies. This is a freaking massive company with huge potential. Patient impact, 991,000 membership subscriptions, okay? 991,000 membership subscriptions. And if you think that they just got this out of nowhere, that's 174,000 versus the prior quarter. And the last quarter, they also grew at over 100,000. And in this next quarter 4, I have a feeling that they're going to be somewhere like 1.1, 1.15 membership subscriptions. It's absolutely crazy. Their profitability path. So remember how I said that they sell everything at near cost? I kind of fibbed a little bit, and they actually have a massive gross margin of 79%. Not so bad. And then these are the consultations. These are 8.8 million medical consultations since launch. Again, they essentially do those for free so that they could sign up clients, customers for that reoccurring revenue stream. It's absolutely bonkers, this company. This is the magic sauce. It's so simple. So they believe in innovation. They believe in having a trusted brand, and they believe in a seamless experience. Make it as easy as freaking possible. Give the customers something that's cutting edge and remarkable, and then let the customers trust you. Make sure your shit works. Good customer service, good branding, good commercials, so on and so forth. And they truly, truly do that. And they say, through innovation and normalization, we build long-lasting customer relationships. Guys, I'm telling you, I personally use them. A bunch of my friends use them because somebody put me onto their products. It's a phenomenal, not only, mantra, not only their statement, but they actually live by that statement. Okay, remember how I just said that they have 8.8 million consultations? Look how it started. They went from 431,000 consultations to 1.2 million consultations to 2.8 million consultations to 5.2 million consultations to 8.8 million consultations. And this is probably going to be over 10 million in this next quarter. Look at the freaking growth rate. It's absolutely insane. More than 53,000 plus quality control provider chart reviews. Over 33.3 million cumulative patient touch points. Guys, it's absolutely freaking insane. They are growing at a massive rate. Speaking about growth, significant historical revenue growth and gross margin profile translates to attractive gross profit margins. Gross margins, look at this, 197%, 197% compound annual growth rate. Full year 2018, 29%. Then it went to 54%, 74%, and 75%. Annual revenue, 117,000. 117% compound annual growth rate. 2018, 27 million. 2019, 83 million. 2020, 149 million. 2021, 272 million. 2022 is going to be monumental. I can't wait for them to add the next year. It's going to be freaking insane. Subscriptions growth, 80% plus. Q3 2022 year over year. Quarterly revenue growth, 95+%. All you got to see is this. Their freaking chart literally just goes like this. Like, you cannot ask for a more beautiful chart. It's not even like a hockey stick. It's just a straight up whoop. Let's go to the freaking moon. It's absolutely bonkers, this company. The stock is currently trading at $9.61. Take a look at their chart. Over the 5 days, 23% because they were just upgraded by Jefferies. 35% over the last month. Over the last 6 months, 35%. We were buying right here at this point right here, right when the market dropped. Year to date, 52%. And check this out. The last year, 111%. 111% over the last year. This is freaking crazy. However, they did have this crazy run up over here. At one point, they did hit that $24 a share. I truly believe that it can come right back to $24 a share. The hype is actually real. They went up too strong, too fast. However, they're going to get right back up there. I don't know when, I don't know now, or next year, so on and so forth, but they're going to get back up there. That price of that $23 a share, $24 a share, it's warranted. However, it just wasn't warranted at that time. Jefferies Analytics upgrades ahead of 2023 guidance. Hims & Hers added 8% pre-market Thursday after Jefferies upgraded the digital health platform to buy from hold ahead of the 2023 guidance expected later this month. The decision follows an analysis of app downloads, web traffic, and market share conducted to understand the underlying business trends, and analyst Glenn Santagello wrote. So you understand they're tracking all of the interactions with Hims, and the interactions is going through the freaking roof. And I quote, overall, the data continues to suggest momentum in the underlying business remains strong. Santagello added, raising the price target on the stock to $11 from $7 a share. Citing the company's growth trajectory for full year 2020 to 2022, the analyst argues that the current consensus estimates for Hims & Hers for the full year 2023 and full year 2024 may prove conservative. Recently, Seeking Alpha contributor Michael Oliveira also upgraded Hims & Hers to a strong buy from a buy, arguing that its management with 30% ownership in the company could be highly motivated to drive the shareholder value up. Guys, at the end of the day, I could keep talking to you about Hims all in. I could go for hours. This is a stock that nobody talks about. There's maybe one or two YouTubers that speak about them. Sam is actually another YouTuber that likes hymns. We were supposed to cover them together. Never got a chance to. Shout out to Sam. And it's a beautiful company, and it's so under the radar. Nobody's talking about them. Barely any analysts are speaking about them. No YouTubers are speaking about them because they're boring. And I'm telling you, nobody's going to watch this video. And it's an amazing video. And by the time someone's going to be talking about them, it's going to be too late because they're going to already take off. It's like too late to the party. I've been buying hymns for a while. It's one of the few stocks that I'm actually up on. I love this company. It's absolutely tremendous. And I was waiting for a pullback, and that pullback never came. I wanted to add more to my position, and I really never got a chance to. If it pulls back, I am going to buy more in this company. I honestly think this is a world beater, and you guys should definitely do your own due diligence. You should definitely do your own research, but do yourselves a favor and take a look at this company. Not because I'm telling you to, just because look at the numbers I gave you. The numbers they're putting up is the numbers that any company would love to have, right? As a matter of fact, Arnie, if you're watching this, Arnie Investing, I challenge you to look at hymns. You're so good with charts and numbers. You would do a fantastic job to look at hymns. I wish you would review it because I want to know what you think about the company. Guys, that's enough for hymns. If you guys want some more information, please click on this video down below. It's another video jam-packed with data, knowledge, and fun laughs. I wish you a happy weekend and enjoy the Super Bowl tomorrow. Have a great day.